Hello everyone, let's recap the trading week that we have had on S&P 500, on the Nasdaq and on GBP/JPY. Let's start off with GBP/JPY. First and foremost, on the fundamental side, if we look at the pound, the Bank of England held the rates at 4%, with 2 out of 7 still wanting a rate cut. Right, they said that they're going to be a bit more cautious, right, and data driven, so they will only be more aggressive maybe in their rate cuts if there is a change in employment, or if employment is worsening too much, or if inflation is rising too fast, and then they may be a bit more aggressive with the rate cuts. So that's the stance that they have. Overall, we can see that the growth is a bit sluggish and inflation is a bit high. So we could expect further rate cuts in the future, of course, but how aggressive they're going to be, we don't know yet. Regarding the Bank of Japan saw inflation come at 2.7%, which was expected to come at 3.1%. So inflation has slowed down, and we know that the Bank of Japan is looking to be a lot more hawkish, right? They're raising their rates. Now, with this information, I believe that they're not going to raise their rates as aggressively because it's going to tarnish inflation and cause inflation to slow down. They want to keep inflation above 2%, and this unexpected inflation falling below what was expected can mean that they will be less aggressive in their rate hikes. So this means that the gap between the interest rates between the pound and the Japanese yen is a lot wider, and investors will be a lot more attracted to the pound. As well as that, we're not going through huge economic uncertainties right now, so a lot of money won't be going into the yen. The yen is a safe haven currency, so this can mean that GBP/JPY overall can be bullish. And right now we are having a correction. We saw it come to the 200 resistance, and it is falling now. So technical side, we've seen GBP/JPY pushing up, right? Whenever we saw